All right, everyone. David Richey here with the Richey Group, Keller Williams. Got my buddy Mike Marlowe back on the line with us again. Mike, what's going on, man?
So just, another day in paradise, mortgage
That's it.
business.
So let's talk about this. We've talked about first-time home buyers, credit scores. We talked about a lot of things in some other videos. Let's talk about the do's and don'ts. Once you're pre-qualified, you're out buying a house, and let's even say you're under contract, especially if you're under contract. What are some do's and don'ts that you tell your clients?
Well, this one's pretty simple. You can Google the 10 mortgage commandments, and it'll pull up the list for you. And that's a pretty good list. So number one is do not change jobs, become self-employed, or quit your job. That's an automatic decline unless you can come up with documentation, and it kind of turns into a mess. Do not go buy a new car. I can't tell you how many times I've had that happen. It'll kick you out.
Well, Mike, you've already got me pre-qualified. What does it matter?
Yeah, and we pull your credit the day of closing. And you can, I had one that's happened to. Do not buy furniture on credit. I know you're excited about the house. Mattress Mac will sell you furniture after closing. Do not buy it before closing. I had a deal bust out because the customers, they bought a car and furniture on an FHA the day before closing because the salesman told them it wouldn't show up on their credit for 30 days. That doesn't, but your inquiry does. They couldn't get the loan. They were done. They're sitting at closing, had to walk out because they bought a car and furniture, and you can't take the furniture back and you can't take the car back. So you're kind of done. So the other one is do not use credit excessively. It's going to affect your debt to income ratio. Do not spend funds for closing. Those funds have to be for closing. And we don't have premium pricing right now, so the lender doesn't really have the extra funds to sometimes offer you incentives. So there's no par pricing. Do not omit debts on your application. We're going to find out about them. If you own property free and clear, you still have to pay taxes and insurance on it. That has to be included in your debt to income. So you got to be aware of all that. Do not have a lot of inquiries. You're going to have to explain every one of them, and it can create a mess for you. Do not move money around. Leave your money where it is. If you got to move it around, talk to your lender and say, I got to move money from a money market to a checking. Okay, here's how you have to do it, and we'll tell you the process, but don't just move money around. And don't make large deposits that we can't source because you can't use those funds. They'll disqualify those funds. Do not change bank accounts. I have people that change bank accounts. I can't tell you what a mess that is, trying to, verify everything when you've changed banks. And then finally, do not co-sign for anyone. Co-sign just means the other signer. The debt's still yours. So do not co-sign if you're going to buy a house and you're worried about qualifying.